might be biomethane, it might be EACs. We at 3 Degrees cover all things related to climate, which I'll talk about here in a second. I'm also joined by Brianna and Christina, who are both really the experts that are working day in and day out in these power markets in North America and Europe, negotiating PPAs on behalf of our clients and helping them to understand the market, go through RFP processes, and ultimately have successful deals. And so they're really the experts who will present today, and excited to hear what they have to share. Before I hand it over to Brianna, just one last slide from me is just a little bit about 3 Degrees and who we are. So 3 Degrees is a leading global climate solutions provider and consultancy. All we do is climate and focus predominantly on helping corporations to calculate their greenhouse gas emissions, set strategies, and really, most importantly, to decarbonize their scope 1, 2, and 3 emissions. We are about 300 employees globally, headquartered in San Francisco, California, with a significant presence in both the US as well as Europe. So I'm coming from London here today. We also have a significant kind of presence in Oslo and Amsterdam as well. And we've been in business for about 20, or more than 20 years now. So very educated in the market and very experienced in terms of the evolving trends that have been going on for the last 20 years and what is to come as well, what we see in decarbonization. And so with that, I will hand it over to Brianna.
Thanks, Mary, and thanks, Vicky, too, for those great introductions. Happy to be here with you all today. So let's go ahead and dive in. So our key goal here is to introduce this key similarities and differences across North America and Europe, as Mary said, with the purpose of pointing out the key information you need to support your work in developing an effective approach to decarbonize your operations across these two regions. Of course, ultimately, your strategy will be unique and dependent on your individual company's timelines, resources, goals, and geographies. So with that, let's start with discussing how the various ways to procure EACs. EACs are energy attribute certificates. These are the tool that allow companies to make Scope 2 and renewable electricity claims under various standards, including Greenhouse Gas Protocol. So this slide shows all the options for obtaining EACs currently available in these two markets. So it's very similar across North America and Europe. And broadly speaking, there are two types of contracts that provide EACs. Those that include energy and those without energy, that do not include energy. So that's how it's split up on the screen here. So looking at the left, unbundled EAC spot purchases, that, and then at the very end, on-site, whether that's solar or another type of generation, those are two fairly straightforward contracting options, fairly, not completely. But it's the two groups in the middle here, direct contracts and supplier options, that tend to have more nuance and take a longer time to figure out. So as far as that goes, in Europe, electricity markets are fully deregulated, which means that companies that own power generation and distribution of electricity are separated. Green tariffs, for example, are provided by any energy supplier, and they typically provide power with an EAC, but you don't get any visibility on the price of that EAC or have any understanding of where that EAC is coming from. So you don't know about the project in particular. By contrast, in North America, many states and provinces have regulated energy markets, which means that the utility there controls both the generation and distribution of electricity. So in those regions, renewable energy options depend really just on the utility. But in deregulated regions, you have more options, such as virtual PPAs. So while the options may be similar, the market dynamics are very different. There are several markets in North America and many at the country level in Europe. So how these contracts are negotiated and ultimately executed and put into practice do have nuances. So more to come on that. So, also wanted to point out before moving on that we have VPPAs pointed out here, virtual power purchase agreements. Virtual power purchase agreements are a very popular procurement method for EACs for corporate entities. Usually, if they're not doing a spot purchase of unbundled EACs, they're looking at a virtual PPA. A key reason that they are so popular is because they directly support new build renewable energy generation because they provide the developer of those projects with the means to get financing to either build or repower projects. You will also sometimes hear them referred to as a financial PPA, and sometimes you hear it as a corporate PPA too. Okay, so let's dig into the details of a VPPA a little bit to better understand why this is so popular. So starting, we'll go left to right here. With the economics, there's no capital investment up front for you, the buyer. There's a potential for an upside revenue generation, whereas pretty much all your other options, except for maybe some cases of on-site solar, it will be at a cost. And it can act as a hedge against retail prices if you are currently purchasing energy through some sort of index tied to wholesale market prices. Now, for impact, this is a big one. Um, there is a direct lasting impact on the grid from you signing a virtual PPA. It provides a simple, compelling marketing story that has environmental and economic messages. You can create a geographical link between where your operations are and where the project is located. And you have this simplicity in that you can just do a single transaction and make a meaningful impact on your goals. Now, of course, there are challenges. So moving to the right-hand side, there are variable, the big one for virtual PPAs is that there are variable monthly cash flows for virtual PPAs. And that is because VPPAs are dependent on the fluctuations of the wholesale power price market. So estimated VPPA value are driven by forecasted prices. And this is a long-term commitment, and contracts may exceed what you're typically used to signing on for. In Europe, it's closer to a 10-year commitment on average these days, and in the US, it's usually around 12 or 15 years. And the first time a company seeks to do a VPPA, does require a lot of upfront education and engagement across many of your teams in order to make sure everyone's comfortable and aligned with this approach. So these challenges do underscore the need for performing due diligence on both the project that you're seeking to enter a contract with and the developer, since they will end up being a long-term partner. Okay, so with that, I'm going to hand it over to Christina to talk more about the PPA market specifically.
Thanks, Brianna. Now that we have introduced the concept of virtual PPAs, we would like to explain how the North America and the European PPA market work. There are some similarities and some differences which we believe that the audience should be aware of before starting a procurement in both regions. And so overall, the two markets are not that different, as Mary was saying. If you have already done a PPA in one region, with these slides, we will help you to smooth the path to do the PPA in the other region you're interested in. And so, first of all, both markets are defined like a single EAC market. But what does a single EAC market mean? So for North America, any renewable energy certificates, any REC generated either in US or in Canada belong to the single market, which is highlighted in green here in the chart on the left, and can be actually moved around and retired across both the US and Canada. However, there are some limitations on virtual PPA locations in North America, but we will go through it in just a second. If we go back to the single market topic, if you see in the chart, basically Mexico is in gray, it's not green, and that's because Mexico is excluded from the single market. So if you have any load in Mexico, you will need to procure in country, and they have their own certification scheme there. If you look into Europe, the situation is a bit more complex. For Europe, we have the Association of Issuing Bodies, in short AIB, which oversees the cross-border trading of certificates. They are called guarantees of origin within the European single market. As you can see from the chart, most of the European countries are member of the AIB, and the general rule is that guarantees of origin generated in one AIB country, for example Spain, can be moved and retired in a different AIB country, for example France. From the chart, you can also see that there are some exceptions. For example, the UK, it is not part of AIB and has its own local scheme, which is called Renewable Energy Guarantees of Origin, or in short, REGOs. So AIB GOs actually cannot be used for claims in the US, and neither the opposite. You need to procure in country if you have law there. There are some other countries which are marked in yellow as Poland and Romania. Despite facing some delays, they are actually in the process of joining the AIB. So when the time comes, AIB GOs will be used for claims in these countries and vice versa. As of today, if you have a load in Poland or in Romania, you need to procure in country. Buyers should also note that besides of AIB rules, RE100 has also established its own single market rules, let's say, which requires a country to fulfill different requirements, which are, first of all, being part of the European single market. The second one is being a member of the Association of Issuing Bodies. And the third one is that the country needs to be grid connected to a country that meets the first two rules. Just for an example, if you look into Ireland, this is a clear example of Ireland being excluded from the RE100 single market. Even though Ireland is part of AIB, there's no grid connection to mainland Europe. It's only connected to the UK, which is not part of AIB. And so this means that if you have load in Ireland, you will need to procure in country. However, there's a subsea cable between Ireland and France currently under development, expected to be finalized around 2027, more or less. And so once that is finalized, buyers will be able to procure AIB GOs and use those GOs for claims in Ireland, and vice versa. But until today, if you have load in Ireland, you need to procure in country. And Irish GOs are very famous to be pretty expensive compared to AIB GOs, as well as PPAs in Ireland. Moving on, there's another similarities here that we would like to highlight, and is that for both North America and Europe, the PPA market is very mature. There are still some differences. While any type of PPAs can occur everywhere in Europe, if you see the chart, basically the map of Europe is all navy, because PPAs can be procured everywhere there. For North America, the situation is a bit more complex. The location of the renewable energy project determines if it can be tied to either a physical or a virtual PPA. And so virtual PPAs can only occur in the organized markets, which are the ones that we mark in different colors in the map of North America. You can see two organized markets in Canada, also called ISOs, and 7 in the US. Physical PPA instead can be located basically everywhere, but if those projects are located in the gray areas, the utility must be involved in the process. In any case, once you have a renewable energy certificate, buyers can apply those certificates to operations anywhere in North America, as we have described in the previous slide in the single market. For Europe, it's easier. PPAs can be executed everywhere, as I said. Not all markets are developed and mature, but the infrastructure is there to execute transactions. In both cases, physical or virtual, buyers can actually sign PPAs and use those EACs around in an AIB country, as I shown in the European single market slide. In terms of transactions, some curiosities here. In 2024, PPAs have accounted for 27 gigawatt contracted capacity in North America, with ERCOT leading the PPA activity. In Europe, instead, transactions reached 17 gigawatt in 2024. And in terms of PPA activity, Spain and Germany are very famous countries for strong PPA activities over the past few years, especially if we're talking about solar technology. If we talk about wind instead, of course, the Nordic continues to be a strong focus for corporations, specifically for Finland and for Sweden. If we look into other markets, for example, the Asia market, so APAC, it's clear actually how the North America market and the European markets are much more mature in terms of PPA activity. However, corporate PPA activity in APAC is developing so fast, especially in the last 3 years, now reaching basically around 13 gigawatt capacity, which is very close to what the transactions were in Europe in 2024. Moving on, there are other key differences that we would like to highlight to you today. One very important difference is the average size of the renewable energy projects. So in North America, projects tend to be very large, while in Europe, there are more small-scale projects. Buyers, for example, in Europe are used to transact more projects or transact multiple PPAs with different counterparties because the projects are smaller. In countries such as Italy, this is very common. The permitting process in Italy is very tedious, and so developers tend to build smaller projects because the permitting is just easier for approval, and they aggregate different plants under one unique offer to the buyer as a portfolio. If we look into the PPA term length, as Brianna said initially, contracts in North America are around 15-20 years. In Europe, we have 10-15 years, more or less. If we look into the projected PPA values, buyers that are procuring in Europe are facing more favorable project and projected PPA values compared to North America. For some specific markets, and we will see that in the next slides, buyers can actually find some neutral and positive PPA projected values, especially for one particular technology that I won't spoiler now. And so, yeah, there are some opportunities in Europe for sure. On the market sentiment, the current sentiment in Europe is a buyer's market. We have experienced 3 years, 2-3 years of a strong seller market during the energy crisis. Power prices were so high, and we had some supply chain issues. And so the demand on the buyer side was very strong, and the supply was weak. And so that imbalance made completely a seller's market. Now the situation has come down, and so we have come back to a buyer's market. In North America, instead, with the recent change in the tax law, which Brianna will talk about in a second, buyers are likely in a rush to ensure that they take the most financially attractive projects. And so we would say that now it's more a seller's market than a buyer's market for North America. Moving on to the next section, we would like to highlight here what are the latest trends impacting the PPA landscape. And so I'll start with Europe, and I'm pretty sure that you have heard a lot about negative prices and how these are impacting PPA values in Europe. It's true that negative hours have been increasing in the last few years, especially in countries such as Spain, Germany, Finland, and this phenomenon is mainly due to the combination of very strong renewable generation during low demand periods, which results in strong price cannibalization. However, there are still some few great projects out there, and that's why we believe an advisor such as 3 Degrees could help you find and catch those projects before they just slip away. In addition, we are also able to support you mitigating the negative price events risk while you negotiate your PPA with the counterparty. And so if you look at the chart, This is showing the projected PPA value of solar and wind PPAs across different European markets. It's clear that solar PPAs land in negative territories, which means a net cost to the buyer, while in some countries, wind is projected to be even positive, and so a net income to the buyer. And this is kind of strengthening the fact that wind PPAs continue to offer more stable and favorable financials. The issue with wind projects is that they are pretty scarce in the market compared to solar projects. For those buyers with load spread in several AIB countries, we believe that cross-border PPAs can be optimal tool to mitigate the market risk and the negative price event risk. For example, if a buyer oversizes the project in, for example, Greece or Spain, choosing the wind technology. So oversizing a project there and use the guarantees of origin from that country to cover all AIB load would definitely ensure a positive projected financials against doing instead individual PPAs in countries where the solar penetration would erode capture prices, as you see from the chart. And I believe that's all from me, and I'll pass the word to Brianna.
Thanks, Christina. So the big news in North America is that in the US, a new law took effect in July of this year and is having a very large impact on renewable energy development. So tax credits for wind and solar projects were sunset early, much earlier than expected. This is dramatically increasing project costs and therefore PPA prices. Tariffs and other regulatory barriers are also contributing to this, and higher PPA prices would lower PPA value. However, the opposite effect is, by contrast, the lack of this new renewable generation being added to the grid, as was previously expected, is going to increase wholesale electricity prices. And that in turn will have the opposite effect to PPA prices increasing because it will increase PPA value. Since that is how PPA value is determined. It's based on wholesale electricity market prices. So if there isn't enough new supply to meet the new demand coming on, mostly from AI data centers, then electricity prices across the country are going to increase. So generally, we avoid trying to time the market, but this new legislation does make it relatively clear that to meet any near-term climate goals, basically now through 2030, this is the best time to execute a VPPA in the US before PPA prices rise. So as the federal government support is eroding, we see this as underscoring the urgency for companies to drive climate action, which is historically what has happened. In the early 2000s, large tech companies were the leaders in getting VPPAs on the scene and really spurring the renewable energy industry in the United States. So we see it as a great time to assess your renewable energy options and act on corporate goals. And I will say that despite these challenges, PPA deals are progressing. We're very busy because PPAs remain an impactful and accessible method for achieving significant Scope 2 emissions reductions. I'll leave it there due to time.
Thank you,
So
Brianna.
back to you, Mary. Thanks.
Yeah, thank you so much. So I'll just wrap it up very quickly so that we have enough time for questions and really just give a summary for overall how to think about your approach going forward. So I think Brianna actually said it really well just now, but VPPAs are a proven method for corporates. They are still very, very popular among corporates to reduce their Scope 2 emissions and meet their renewable electricity goals. And we don't anticipate that necessarily going anywhere. The North American and European regions, as you saw, are quite similar. They have their own nuances in terms of market trends, but our experience is that if you have experience in one region, you're very well positioned to execute a deal in another. And we oftentimes see corporates, for instance, do a deal in the US first and then move to Europe or vice versa. And there are still attractive projects available in both regions, despite all the market challenges and despite the policy changes. They might be a little bit more difficult to find, and so that's really what we're specialized in is to help you find those projects and make sure the risk associated with them is as mitigated as possible. But just really want to put out there that it's not all doom and gloom. There are definitely great projects out there in both markets. And so with that, I'll just say a little bit more about 3 degrees before going over to the questions. As Brianna and Christina mentioned, they're very busy negotiating PPA contracts and finding these deals for our corporates. We do have extensive experience in both markets as well as globally, and we've helped to transact over 11 gigawatts of PPA deals for our clients, a couple hundred different renewable energy projects contracted, and have advised hundreds of advisory and implementation strategy work to better understand what your options might be for your given portfolio and your given requirements or even contingencies and whatnot. So we do believe we're a trusted partner in this space and would be happy to work with any of